Imagine waking up one morning and discovering that the biggest problem facing humanity isn't oil, gold, or even electricity. It's water. Not because the oceans have disappeared, but because clean, usable water has become one of the world's most valuable resources. Factories can't operate without it. Power plants can't generate electricity without it. Semiconductor companies can't manufacture chips without ultra-pure water. Cities can't grow without treating wastewater. Governments across the world are investing billions of dollars to solve this problem. Climate change, rapid industrialization, and population growth are making fresh water increasingly scarce. Now here's the interesting part. Whenever a country builds a desalination plant, whenever a factory installs a zero liquid discharge (ZLD) system, or whenever industries recycle wastewater instead of wasting it, someone has to design, build, and maintain those systems. That is where today's company enters the picture. Today we're talking about Ion Exchange Ltd, a company that has quietly spent decades building solutions for one of the world's biggest long-term challenges. So, without wasting any time, let's dive straight into its fundamentals. Business overview. Ion Exchange is one of India's leading environmental solutions companies. It doesn't just manufacture water purifiers, it provides complete end-to-end water and environmental management solutions. The business operates through three major segments. 1. Engineering business, around 60% of revenue. This is the company's largest business segment. Ion Exchange designs, builds, and executes turnkey projects such as industrial water treatment plants, wastewater recycling systems, zero liquid discharge (ZLD) plants, large-scale seawater desalination plants. Its clients include major industries and government organizations across the world. A recent highlight was a 503 crore rupees contract from Hyundai Engineering and Construction for a filtration pipeline project in the Middle East, showcasing the company's growing international presence. 2. Chemicals business, around 30% of revenue. The second major pillar of the company is specialty chemicals. Under its INDION brand, Ion Exchange manufactures Ion Exchange resins, water treatment chemicals, specialty process chemicals. Unlike the engineering business, which depends on project execution, this segment generates recurring revenue and generally enjoys better profit margins. As this business expands, it can significantly improve the company's profitability. 3. Consumer products, around 10% of revenue. Most retail consumers know Ion Exchange because of its zero-B water purifiers. Although this segment contributes the smallest share of revenue, it helps strengthen the company's brand recognition. Financial analysis. Now let's look at the numbers. Current market price, CMP, 426 rupees and 90 paise. The stock is currently trading well below its all-time high of 580 rupees and 65 paise, offering investors an opportunity after a meaningful correction. Market capitalization 6,321 crore rupees. This places Ion Exchange comfortably in the mid-cap category, where companies often have strong long-term growth potential. Valuation trailing P/E ratio, 35.47x. While this valuation isn't cheap, environmental solution companies often command premium valuations because of their long-term structural growth opportunities. Revenue trailing 12-month revenue, 2,914.84 crore rupees. Revenue has grown steadily, supported by strong infrastructure execution and rising industrial demand. Net profit 142.67 crore rupees. Profit margins have been temporarily affected due to expansion-related expenses and capacity additions. Return on capital employed, ROCE, 14.1%. This indicates the company continues to generate healthy returns despite ongoing investments. Debt position, debt to equity ratio, 0.347. The company maintains a comfortable debt level, giving it financial flexibility for future expansion. Shareholding pattern. Promoters hold 25.43% of the company, and importantly, none of their shares are pledged shares. Ion Exchange has maintained a strong corporate governance record for more than 5 decades. Institutional investors have also shown increasing confidence. Mutual funds hold 12.48%. Foreign institutional investors, FIIs, hold 4.86%. Growing institutional ownership is generally viewed as a positive sign for long-term investors. Key risks. Every company has risks, and Ion Exchange is no different. Risk 1. Margin pressure. The company recently invested heavily in its new specialty chemical manufacturing plant at Roha, Maharashtra. Large capital expenditure and initial operating costs temporarily reduced profit margins. The positive side. The Roha plant has now started commercial production. As capacity utilization increases over the coming quarters, the company can benefit from operating leverage, potentially leading to improved margins. Risk 2. Working capital. Engineering projects often take months or even years to complete. As a result, significant capital gets locked into inventories and receivables. The positive side. The growing chemicals business generates shorter business cycles and recurring revenue, helping balance the cash flow challenges of the engineering segment. Why many investors are watching Ion Exchange? 1. A long-term bet on global water scarcity. Water is becoming one of the world's most valuable resources. Industries can no longer expand without proper wastewater treatment, recycling systems, and zero liquid discharge technologies. These solutions are increasingly becoming necessities rather than optional investments. This creates a long-term demand opportunity for companies like Ion Exchange. 2. Strong technology partnerships. Ion Exchange has partnered with global membrane technology leader MAN plus Hummel. Through this collaboration, the company manufactures advanced ultrafiltration membranes and membrane bioreactor (MBR) modules, strengthening its technological capabilities and expanding opportunities across Asia and the Middle East. 3. Strong order book. One of the biggest positives is the company's consolidated order book of over 2,711 crore rupees. A healthy order backlog provides revenue visibility for the next 2 to 3 years and supports future business growth. Final thoughts. Ion Exchange may not be the most talked about stock in the market, but it operates in an industry that is becoming increasingly important every year. The company combines engineering expertise, specialty chemicals, recurring revenue, global technology partnerships, and a healthy order book while maintaining a relatively strong balance sheet. Although short-term profitability has been affected by expansion costs, those investments could potentially support stronger earnings growth as new capacities ramp up. For investors looking at long-term themes such as water scarcity, industrial sustainability, and environmental infrastructure, Ion Exchange is certainly a company worth keeping on the watch list. That said, every investment comes with risks, and future performance will depend on execution, margin improvement, and continued order inflows. So, what do you think about Ion Exchange? Do you believe it has the potential to become a long-term wealth creator, or do you think its current valuation already reflects most of its future growth? Let me know your thoughts in the comments below. I would love to hear your perspective. If you found this video helpful, don't forget to like, share, and subscribe to the channel for more detailed fundamental analyses and investing content. And as always, this video is made purely for educational and informational purposes. It is not a buy or sell recommendation. Please do your own research or consult a qualified financial advisor before making any investment decisions. Thanks for watching, and I'll see you in the next video.